Good morning, everyone. Good afternoon, good evening, wherever you are. Welcome back to MGA 101. My name is Christopher Lowell. I am Managing Director at InnSure, a nonprofit innovation hub at the intersection of climate change and insurance. I also sit on the board of Greenie Re, a reinsurance company specifically intended to provide risk capital support to MGAs in the climate space. We've loved all the conversations that we've had. Hopefully you have as well. This morning, morning my time, we have an amazing conversation lined up for you guys with John Willemsen of Willemsen Advisors. I've known John for about 5 years now, and he has a wealth of experience and expertise in this space, and he's willing to share it with you guys today. So, John, you want to give a little bit of an intro to both yourself, your background, a little bit about your company?
Yeah, sure, of course. Started about 30 years ago in the business, owned an MGA at one time, and then worked for a series of really awesome companies, Munich Re, Arch Re, Accelerant, and built a career basically in the program space. I have seen some 3,000 business plans of MGAs. So I kind of I've seen the good, the bad, and the ugly of the space. And I love it. I think it's a great space to be in. And what I do right now at Willemsen Advisors is I work with startup MGAs that need a little bit of extra help to get themselves to market. I work with existing MGAs that are typically working on something more specific in nature, right? They have an issue, they have a problem, they have a question, and I try to help them get through all of those issues. Or we just throw a bunch of programs on a table and we try to figure out everything that needs to be figured out on any of those programs. It could be a loss ratio problem. It could be how do we grow this program? What do we need to change? And then I work with a fair number of private equity firms as well. And these tend to be very large opportunities that a private equity firm's looking at. Probably north of 500 million. You may not know I'm involved, but I'm behind the scenes giving some form of guidance. Private equity guys understand the business. They understand the numbers really, really well. I provide the nuances that they're looking for to help them value an MGA purchase so that they can do the right thing going forward.
That's great. That's fantastic. This is perfect for to share your experience with the audience. That's
Happy
fantastic.
to.
3,000 MGAs. That's a lot of MGAs. I'm sure I'll have questions about their longevity or how many persist and succeed. What are the key ingredients to a great MGA?
I think that what you have to be able to do is have a differentiator in the marketplace. What is it that separates you from the other 2,000 plus programs in the space, right? It's a $110 billion marketplace right now, 2,000 plus programs. Why are you going to be different in this marketplace? I think that a lot of folks coming into the space need to recognize that what they're really doing is they're selling a financial promise and not necessarily just a product, right? It's not just a widget. What we have to understand is that we're in a heavily regulated and competitive environment, and people need to kind of come through all of that. I would say, Chris, on top of that, specific focus in a niche, like contractors, chimney sweeps, dry cleaners, whatever it might be, pick something and figure out the best way to approach that kind of a market and recognize that I think in this marketplace, in my opinion, underwriting discipline is probably one of the most important pieces of all of this. And we went through kind of the insurtech boom, and that all of that worked really, really well for the most part. But some folks focused way too heavily, I think, on the tech side of things. Bring back that underwriting discipline because ultimately that's where your bread is going to get buttered, right? Um, and I think that another lesson learned through this process, for particularly for a lot of new folks coming in, is that insurance carriers are not necessarily patient capital, right? They want to make money quickly. And why is that? Because they don't want to be a testing ground, really, for your idea. So your idea has to be very solid. You have to be able to go through the process, right? And be able to explain exactly what it is you want to do. And if you can't satisfy all of those needs, insurance companies are going to have a really hard time signing up for that. They want to make sure they're going to make money. They don't want you to leave in a year or 2 years. It just makes it a little bit more difficult. And recognize, right, that ultimately, um, every time you bind a policy, they're really giving you the opportunity to write a claim check for, let's say, $1 million.
Yeah.
So it's a lot of responsibility that sits there for an MGA in the space, right? And carriers take it very seriously to go through that process. I'm sure, Chris, you've been through this, right? So you get it. You completely understand all of that.
No, and building that credibility and that trust
Yeah.
with the carrier is absolutely critical, right? Like that's in some sense the carriers are outsourcing their distribution and underwriting function to a trusted partner, right?
Yeah.
And they need to build up and believe that trust. I'm sure there are many more things we can talk about and what makes a great MGA. But the team itself, like what aspects do you look for if you were a team showing up to either a risk capital provider or potential venture capital provider? What do you really want the team to have? What do you want the team to look like?
I think you're if you're just starting out in the MGA space, solid underwriting, distribution, and operations, right? Those three things coming together help solidify the base for everything else that you do. And then you bring the tech in around all of that. But I think you need to have those three skill sets to start with before you go anywhere. Does that make sense?
It does. Do you think of the lead person on that team? Uh, Which do you find most sort of compelling or appealing? The lead person being from the insurance world, being very careful around underwriting, or in some sense being from the insured space where they understand the pain points and the customer and the potential distribution mechanisms.
Each one of them, right? It depends on really the situation as to which one of those is probably going to fly the best. I think that what I always try to stress to folks when I speak to them is recognize you're walking into a world of insurance, and then you are going to be speaking with the chief underwriting officer and everyone else on that team, including underwriters and actuaries, right? So make sure you can have that conversation to start with. And then the tech kind of can come in around all of that and make it that much better, right? Everybody is looking for tech. I happen to believe the MGAs are in a great spot right now. I could see elevating even more where the MGA that actually could provide all of the tech that is needed to slice and dice information becomes super powerful in this marketplace. Carriers have a tendency to be a little bit slow on that, right? And being able to adopt that across their entire platform. Whereas an MGA actually can adopt their technology relatively quickly. It's a big spend for them, but if they can do that and create that kind of marketplace, I think that works really well in this marketplace right now.
Yeah, I think sometimes that tech can be a differentiator,
Yeah,
but you want to make sure that you're not just someone with a hammer looking for nails, right?
right. Yep.
Um, so you've seen 3,000 MGAs, and in some sense, my next question isn't actually just about insurance or MGAs, but do you see more success when a founding team is tightly knit because they may have either known each other in a previous life, or they're in some sense friends, or do you see folks that may not have the chemistry, but their resumes line up really well to sort of show up and to a carrier to engender trust? And so I'm sure there are pluses and minuses to both. You got
I would
3,000
agree
data
with that.
points.
Yeah, I think that, right? It Partnership's a marriage, right? You've got to work at it, right? And it's one thing to be friends, but can you be friends and run a business together? Or is it sometimes better to actually have not necessarily known each other as friends and just come together and create something special? I think that depends on the person and the people and the team, right? To try to bring all of that together. Um, I just think that they need to support each other in some function. Um, Sometimes what I see are two tech ladies, two tech guys, or two underwriters trying to get together. They need both, right? You've got to have both of those kind of disciplines in order to make this, I think, really work the best.
That's fair. That's great. And honestly, not to put in a random plug, but what we do at InnSure on the climate space with MGAs and programs is try and identify and pair together innovators and other innovators who should be supporting each other. Right?
Yeah,
It's an ecosystem of subject matter experts, and when you find the right team, that becomes really powerful.
yeah. And I think that if I could just add on to this a little bit more, one of the things that I find often is distribution is critical in this space. That a lot of people have a really good idea, really good underwriters, but yet lack the ability to actually distribute the product. And that has to be looked at really, really solidly. You have to be very honest with yourself and create kind of you've got to have a business plan, do a SWOT against all of that. And then at the end of the day, recognize whatever weaknesses you might have and build those back out again. If you don't have distribution, you're going to have a really nice looking product sitting on a shelf and not moving
Yeah.
at all.
So imagine you've got a team and, around a whiteboard, this team is really convinced they've got a differentiated,
Yep.
fantastic product out there. What do the first 6 months look like? Like, what is
Yep.
the startup to this process? How do you get out there? How do you get from 0 to 1?
Organized, right? Be very, very organized. I think that the first thing I would say about that is, and this isn't meant to be a slight against carriers, but when a carrier says they're interested, it doesn't mean you have a contract, right? All too often, you just haven't given them a reason to say no or say yes. So they're going to keep smiling at you. And I have spoken with a number of startups that have often felt that they have a contract, and they do not have a contract until you get that contract signed. And I would tell you it's 3 months later. Now you've got a contract, right? I think that that's going to work and everything is coming together. I think the another underestimated piece of this is that the operational lift itself much heavier than people recognize. It takes longer. Getting to contract may take you 3 months. It may take you 6 months. It may take you 9 months. And I have heard of stories that have gone on even much longer than that, right? So that's just the contract piece. Now you got to make sure you're licensed. You got to have, make sure you're filing. If you're doing admitted paper, all those filings have been complete. Filings can take for admitted paper up to 12 months, sometimes even more, right? To get that approved and through all of the states that you want to do business in. Um,
Yeah.
and I think that I would add to that, Chris, is money, right? Capital is going to be extremely important here. If you think you're going to get it done in 3 months, you're not, right? So we all know that at the end of the day, if you need to have a minimum moat, I would say, of 12 months. I would prefer most people have 24 months to be able to get through to launch and be able to not only cover obviously the expenses of the people, but all of those other kind of like soft expenses that you have, systems, stationery, whatever it might be. All of those other things have to get brought in as
Yeah.
well and thought about.
Well, so let's talk about capital for a
Yep.
second. So it's tough to articulate the fullness of someone's idea and someone's business in a set of pitch materials. And maybe with new technology and generative AI, maybe the process will shift a little bit. But I haven't necessarily seen that yet. I still see sort of pitch meetings, right? Sort of you've got a half an hour with a venture capitalist who has not potentially meaningfully prepared before the conversation. You've got a half an hour, and you're probably bringing a deck to it. What's the story? How do you think about the story in that deck, and what are the key elements? I guess sort of key elements versus nice to have. How do you think about sort of laying that out and what you need to bring?
From a VC perspective, I think that when am I going to make money? How am I going to make money? Am I going to make enough money? Right? All of that kind of plays into whether or not they're going to want to sign on. And I think that that's probably the beginning thought process anyway. And then after that, it's a matter of, do you actually have the chops to get through this, right? Do you have the underwriting expertise? Do you have a really good idea? And then all of that kind of flows through. But I suspect from a VC's perspective, how am I going to make money? How quickly am I going to make my money back?
Right. And so when you're thinking about, and I know we started just there on venture capital, but even if you're approaching sort of risk capital, how do you think about the other items? I don't know, like rating methodology and like at what level of both detail.
Yeah.
Yeah, how do you drive through some of those details?
I think I always equate the launching an MGA to launching an insurance company without having to raise the capital to pay claims.
Mhm.
Kind of like everything else is very similar. It's not identical, but right, but there are a lot of things that have to occur. And I think that when you're presenting to whether it's risk capital or VC, you have to have all of that laid out in a nice streamlined deck, right? And there are some 20 different pieces to a deck that I would always make sure are included. You don't have to necessarily go into the detail, but you best have the detail behind the deck and better understand all of those nuances that you're talking about. Again, if you think about what I started with, right, where I've seen some 3,000 business plans of MGAs, right? Well, I'm not the only guy in the marketplace that has seen that. There are a lot of other folks that are probably in that same kind of space. And so what I'm getting at is you're going to speak with a chief underwriting officer and their team. They have been through this many, many, many times. They understand the space really, really well. They understand underwriting really well. And then you have an actuary, an IT guy, whatever it might be on that same call. All of these people have been through this. Don't try to BS your way through the process.
Mhm.
Be honest, be fair, but be prepared. Right? If there's anything that I could suggest to anybody, just be prepared to answer all those questions. And if you can't answer them, take a pause. Like really take a pause. A lot of like startups that I've seen come into the space, they have a tendency to kind of come in halfway, right? Their decks are halfway done. They don't recognize the other 40 questions are about to come at them. And so I love, that's what I love doing. I love helping them through that process, right? To make sure they've got as much information as they possibly can. Data is king, right?
So that's a great point. In some sense, there's a back and a back and forth, right? The MGA typically comes from a customer side where they want to solve many of the risk problems that a customer or insured has. Yet the carrier isn't is wants to both provide exclusions to cover themselves, such that their losses are limited, etc.
Yeah.
How often if we say it's a 9-month process to go from sort of early conversations with a carrier to potentially a signed contract, the fidelity of the deck and the say sample policies, the true underwriting rating methodology, etc., it gets finer and more granular as you go. Um, is it okay to have an early conversation where, I don't know if it's without a deck at all, but where the deck is a conceptual deck to get feedback from the carrier early? Or do you think that spends capital with the carrier, that they're time bound, they have tough bandwidth, you should not show up and talk until you're really buttoned up and ready?
I would suggest that you could have an informal conversation. I would never share a deck to start with. I would have an informal conversation with a carrier friend, right? Somebody that I know, somebody that I could speak with to say, hey, here's what I'm trying to do. What do you think of that? And then I would take a stop, right? What I really believe, as I've said before, that when you come to marketplace, you want to have your best foot forward. And having half of that is not going to work. You're going to get a lot of smiles and nods, but at the end of the day, you're not going to get the deal. And now you've got to come back after the carrier told you you're missing half of the information that you need. Now you've got to come back. I usually call that strike two, right? Are you going to get another chance at bat, right? Is that going to happen for you? And if you do, are you tainted? Like, is it getting a little bit strained in the relationship because now the carrier has waited 4 months for you to come back with the other information? And they're like, yeah, we talked to these guys once before. They come back with it. And you kind of like, it creates like a little bit of, I'll call it fatigue, right, in the
Yeah.
process. I prefer that MGAs come out as best as they possibly can. Super strong, super strong.
Actually, so what I heard, because it's relevant for mine, everyone's life as well, is try and have an informal, without deck conversation to get some feedback. So in some sense, you're not even going up to bat yet, right? You're getting
You're
feedback,
not batting yet.
right, and you're counting that, and then
And I would say, Chris, that like, here's the class of business I'm going after. Here's the line of business I'm going after. Here is my differentiator.
yeah.
Here's the limits that I'm thinking about. Here's the way I'm going to rate it up, right?
Mhm.
So that's kind of like the big nuance, right? Just kind of figure that piece of it out and then just bounce it off of a couple of people. If you go running out, what I've seen, right? People go running out to their favorite market. So they're going to run out to Munich Re, Archery, and Accelerate right off the bat, right? They're going to go boom, boom, boom. and now you've just created, half of your deck is done. And so
Right.
it gets really difficult to go back again to talk to those same people. And yet that was your favorite market you went to.
Right. That's fair. That's a great point. So the last thing I want to talk about is actually you talked about sort of getting 12 months or 24 months
Yeah.
capital or burn available in your bank account. What does it cost to sort of start up an MGA? Like, what are the if it said from zero, from I've got an idea now to first, we'll call it first policy sold.
Yeah.
What do you think that takes from a cash perspective?
Yeah. There are a lot of different ways to answer this, but if I could answer it, I think very simply, I would say $1.5 million is what it's going to take you to get through for a 12 to 24-month period. And all of that is going to depend upon what it is you're buying or people coming in at salaries, whatever that might be. I also recommend that people start off small. And I would say that when you have this concept, right, you want to start an MGA, you're one person at the moment, right? Before you start talking to all your close friends about being hired and coming onto the MGA, again, take another pause and then figure out exactly what it is you need as you're coming into the market. Sometimes, right, you don't need two underwriters necessarily, but what you needed, right, was an underwriter and a distribution source or underwriter ops distribution. You needed those. You didn't need two underwriters to start with. Find people that can balance out your organization, and I would try to do it that way. I
Yeah,
probably wouldn't have any more than three people to start with if I were launching a new MGA, and I wouldn't call it bootstrapping, but yeah.
yeah, that's fair. I mean, this has been a fantastic conversation, John. I hope we have another one. There are many other things that we could chat about, but I might roughly leave it here. John, are there other comments or things that we should have talked about in this first one that we didn't?
I think this is a good overview, right, of the kind of the marketplace, if you will. And I think that on any future conversations we have, we can go deeper into whatever the audience might want.
John, thank you so much for sharing your experience and expertise. And everyone, I hope you enjoyed the
It's been my
conversation.
pleasure. Yeah. Thank you. Good seeing you again, Chris.